one, let's discuss about the concept of integrated reporting. This is one of the most ignored chapter by CA Final FR students. So let's begin with discussing chapter overview. It talks about the issuing authority, the purpose of integrated reporting, the salient features, capital framework, which is for the development to guiding principles and content elements. So whenever we hear the word reporting, the first thing which comes to our mind is the financial reporting, right? We as a CA student or an auditor, we focus on the financial things rather than the non-financial things. So in a view to bring the non-financial items also into place, this integrated reporting has been created. This report states out how the organization creates value over a different time frames. Okay, so this is the crux of integrated reporting. We are going to see the future of reporting, which is a combination of both financial and non-financial items. Okay, with this crux in mind, let's begin the chapter. Integrated reporting is consistent with development in financial and other reporting, but an integrated report also differs from other reports in communication in a number of ways. In particular, it focuses on the ability of an organization to create value in short, medium, and long term. So over different frames. Integrated reporting was a concept which was first introduced in South Africa and later on adopted by many countries. Like we have IASB, that's International Accounting Standards Board for in the US, we have IIRC, that's International Integrated Reporting Council, which is specifically set out to establish the frameworks for integrated reporting. And this is a global coalition of regulators, investors, companies, standard setters, the accounting professions, and NGO. So those points which are marked in yellow are the things which we have to focus, and those points which are marked in red are highly important. So keep your books aside and mark these points. So together with this coalition, the communication about value creation should be the next step in evaluation of corporate reporting. Yeah. Right. The framework has been developed keeping in the mind that give greater flexibility to the entity and the management reporting, but also it should target that specific things are being set out in the report. And as the name, integrated reporting will have the integration of both the financial and non-financial information. So this is a one report, one-stop report for knowing about the entire organization. What is the integrated reporting? As we all discussed, right? Reporting is enhancing the plan and report story of the business. How we narrate the story is more important than the actual story, right? Then the value creation concept is the backbone of the integrated reporting and is the direction towards the future of corporate reporting. This is a definition given by Dembridge Lewis. Reflects how a company thinks and does the business. This approach allows us to discuss the material issues facing our business and communities and show how we create value for shareholders and society as a whole. So it should be a clear, concise, and integrated story that explains all of the resources are creating value. This is a holistic approach. That is, integrated reporting gives a holistic approach. Then, it also promotes a more cohesive and efficient approach to corporate reporting, and it aims to improve what the quality of the information supplied. Rather than the quantity, it is about the quality which matters. Now, the next point is that it is a concise communication of how about the strategy, governance, performance, and prospects. What is the organization vision, mission? That's the strategy, governance, how it is being governed, and then performance. What is the current performance, and what are the prospects, future prospects? So it tells about the past, current, and future in the context of external environment. And what is the purpose of this integrated reporting? It's basically focused towards value creation, right? So value, how it is created or preserved, or how it is eroded in over different time frames. It's short, medium, and long terms. This is what given here. Concise communication of strategy, governance, performance, and prospect in the context of external environment leads to creation, preservation, or erosion of value. Okay, whenever an integrated reporting question is asked, you can write this so that the examiner knows that you have read something about it. Okay. The primary purpose of integrated report is to explain the providers of financial capital, how an organization creates, preserves, or erodes value over time. Okay, value creation is the key concept in integrated reporting. Who are the stakeholders here? Here, stakeholders will be employees, customers, suppliers, business partners, local communities, legislators, regulators, and policymakers. Now, let's discuss about the salient features of integrated reporting framework. This was a question which was asked and made when I do. Okay, integrated reporting framework is a principle-based approach. It doesn't set out like indicators. It doesn't set out certain indicators, but it's like a principle. It is whenever it is a principle-based standard or approach, It means that the management has to exercise the judgment for the specific circumstances of the organization and has to strike an appropriate balance between the flexibility and how it recognize the wide variation, if any, is there. Okay, then this integrated reporting is primarily derived or primarily written in the context of a private or profit-making sector. Nevertheless, it can be applied for government or NGOs or public sectors also. Okay, quantitative and qualitative information. Quantitative indicators like key performance indicators or some metrics like return on investment or something is there, which are provided can be very helpful in explaining how an organization has creates value. Okay, and ability over time and the ability of the organization to create value can best reported through a combination of both quantitative and qualitative information, because human like what to say human learning curve cannot be mentioned as qualitative information, but it is basically a qualitative information and how we are adhering to it towards the qualitative requirements. So those are the qualitative information which could be reported. Then, identifiable communication should be designated identifiable communication. Here it means that it need not be a standalone report, but it can be a distinguishable. It can be included in some other report, but it should be given a separate status. Like we in the annual report, how we include the auditor's report, we just mention a separate, distinguishable, prominent area, right? Likewise, the integrated report, whenever it's forming part of some other report, it should be distinguishable, prominent, and accessible part of another report or communication. Then it should be more like a summary of information rather than putting all the things together, making it so big to read so that the readers will not read it, right? So it should be a summary of information. It should state the connectivity of how we are creating the value using the financial capital. Then financial and non-financial item integrated report, it's basically towards focusing on both financial and non-financial information. Value creation, preservation or erosion over time. The value has two interrelated aspects. One is value created, preserved or eroded for the organization itself and the others. Okay, it can be an organization itself value creation or for others value creation. For example, for others it can be a CSR responsibility like that. Okay, for us it will be a learning curve development or something like that, or trainings and sessions and like that. Okay, it is basically like value is created basically via the interactions or the relationships or the activities which are being taken. A good relationship between the employee and the boss will create a good value to the organization as a whole. Then we have the different types of capital here. As per integrated reporting framework, there are six main forms of capital. Before going to that, let's understand what does capital mean. The capital are stock of value that are increased, decreased, or transformed through the activities and outputs of an organization. As we know, it is not fixed over time. It is a constant flow between and within the capital. They are increased, decreased, or transformed. There are six types of capital as we mentioned earlier. One is a financial, manufactured, intellectual, human, social and relationship, and last one is the natural. Financial capital. Financial capital are the pool of funds available to an organization for use in the production of goods or provision of services, which is obtained via financing, either be a debt or equity, or generated through operations or investment. So, which is nothing but the funds which are available either through financing or just generated by the business itself. Okay. Then manufactured capital. Manufactured capital are available to an organization for use in the production of goods services. To be start, it's like PPE. All the PPE will be included in the manufactured capital. Intellectual capital, here it will be like intangibles. If PPE is there, it is manufactured capital, and intellectual capital will be mostly of intangibles. It can be patent, copyright, software, licenses, or organization capital, like how we know the tactics, how to retain a customer, we know that particular tactics, or how to manufacture a particular like soda or something, we know the tactics. Then it is an organizational capital. Human capital, this is the best thing, right? People's competencies, capabilities, and experience. How are they so motivated to innovate, bring innovation? Okay, this should be aligned with the organization governance framework and ability to understand, develop, and implementation of organization strategy and loyalties and motivation. When an employee is not loyal, you cannot see a much growth in the organization. So entirely organization basically depends on the employees' loyalty and their motivation towards innovation. Social and relationship capital. The institution and relationship within and between communities, group of stakeholders, and other networks, the ability to share information to enhance individual and collective well-being. It includes like shared norms or common values which we are having, or key stakeholder relationship. Like this is a particular supplier which I have to rely upon no matter what. So how well I'm good in developing the relationship with him. And then the intangibles which is associated with the brand, reputation, and then the relationship social license to operate. And last one is that we have the natural capital, which is nothing but the renewable and non-renewable environmental resources. So it includes actually water, air, minerals, ecosystem, something like that. Not all capitals are equally relevant or applicable to all organizations. While most organizations interact with capitals to some extent, these interactions might be relatively minor or so indirect that are not sufficiently important to include the same in the integrated report. When it's not so important, it may not. Depending, that's in our term, it's like materiality. Whenever it is material, you have to report it. Okay. Then contribution of capital in integrated reporting. With capital, what we are aiming to create value, right? So some organization defines the intellectual capital as comprising what they identify in human, structural, and relational capitals. Okay, yeah. And then in many cases, whether the net effect is an increase or decrease will depend on the perspective we have chosen. Okay, yeah, nothing more in this. So we have a process through which value is created. So business activities, it can be an outcomes having good things, which also have some inputs. These are the inputs. Like capitals will be the inputs. Okay. Similarly, there will be benefits in capital. Like financial, we have the return on capital. Manufactured, we have a good output ratio. Input output ratio is very good. Intellectual capital, we are using the brand so effectively in our marketing strategies. And human capital is so loyal so that we can able to give for some loyalties to them. And then social relationship capital, how well we are good in maintaining the relationship with our customers. If we are good, we'll be able to negotiate some discounts with them. And natural, how good are we able to make use of the renewable sources rather than the non-renewable sources. Okay, it's based upon like the SWOT analysis again. Taken like risk and opportunities will be identified in the governance framework, and the strategy and resource allocation will be a key area where it has to be determined whether this is optimum combination of input output, and then how we are going to see ourselves in the next 5 years. That's our outlook. That is what are the future prospects of the available to the organization, and then how good are we at planning. So basically the business model. Okay, purpose, mission, and vision will be the key strategy. I hope you are good at understanding it. Yeah, there's some sense which is being made. Then there are some guidance principles for preparation and presentation of integrated report, which includes these. Give me a minute. Yeah. There are around 7 things: strategy, focus, and future orientation, connectivity of information, stakeholder relationship, materiality, conciseness, reliability and completeness, consistency, and comparability. Let's understand each of these. Strategic focus. It should be like insight into what is the organization strategy, how well our day-to-day activities are related with the strategies, day-to-day operations are related with the strategies. Either it will be different time frames, short, medium, or long term. Okay, we have to highlight these what is strengths, weakness, opportunities, and threats, and what is the current performance, what is the future performance, so on will be included in the first one, that is strategic focus and future orientation. The second one will be connectivity of information. How good are we at connectivity of information? That is because between the content elements, the present, past, and features, the capitals, financial and other information, quantitative and qualitative information, management information, board information reported externally, information in the integrated report in the organization, others communication, and information from other sources. So these are things which have an interrelation, right? Like we have to check how our capital have been used in the past, how are we using at the present, how are we going to use in the future, and what is the financial and non-financial information with respect to the capital. So all these are interrelated. That's why we have to gain control over the connectivity of information. This will be enabled only if it is logically structured, well presented, written in clear, understandable, and jargon-free language, includes effective navigation devices, just clearly delineated, and cross-referencing. Okay. Then moving on to the next one, stakeholder relationship. It should provide insight to the nature and quality of the relationship. Who are the key stakeholders? Because we are going to say the key stakeholder relationship, right? Who are the key stakeholders? So it can be legitimate needs, their interest, nature and quality of relationship. And our relationship should check how the relationship is there. How good are we at responding to the queries or things which they ask? Then materiality. Materiality is that whenever a particular information is useful for the decision making and which impacts the decision making of the users, then it is material, right? It can again be for short, medium, or long term. What are the relevant matters that are to be identified, and then whether it is so important or we have to prioritize it, then determine the information to be disclosed about the material matters. Then conciseness. Every report should be concise. We do not give a detailed report running to hundreds and hundreds of pages. It could be a small report, just brief and concise. Okay, it should apply the materiality determination process. Those information by material that should be there. Okay, and should be a logical structure that is will be easy to understand. And then may link to more detailed information. Like if we are giving some particular information in the financial report, okay, in the integrated report we may link directly, like we do right in key audit matter. If we are going to give something, we will just give a glimpse and then we will say refer so and so notes in the notes to financial statements. Like that, we may link to the more detailed information. And then we have to express what are things which are going to say in a clear manner, okay, and then plain language, and avoid highly generic disclosure, okay, because specific because it's an integrated report where we are going to say how the organization has created value. It should be more specific rather than generic. Then reliability and completeness. It should contain all matters, both positive and negative. There was an exam question which was asked, only it should include the positive matters. No, it should include both positive and negative matters in a balanced way without any material error. Okay, then consistency and comparability. It should be basis which is consistent over time and should enable comparison either intra-firm or inter-firm. Intra means within itself for the compare with the previous year, or inter means for the current year we are comparing between two different organizations. Okay, use of industry benchmark, indicators of best practice and ratios are tools that can improve consistency and industry comparability. What are the content elements of integrated reporting? There are 8 content elements. One is the organizational overview and external environment, governance, business model, risk and opportunities, strategy and resource allocation, performance, outlook, base of preparation. So let's keep this in mind. Keep these 8 points. Maybe the next exam this could be a question. Okay. So with this, we will understand what are the questions that are related to it. Okay. Like for organization overview and external environment, we should ask what does the organization do and what are the circumstances under which it operates. It's a question to be answered. Okay. For governance, it will be organization governance structure support its ability to create value in short, medium, and long term. It could be either through organization leadership structure, specific processes, particular actions, or culture, ethics, and values. Okay, or the how well it is implementing the governance practices. What is the responsibility with those charged with governance, which is TCWG, and remuneration and incentives, which are linked to value creation. Then, for business model, should answer the question: what is the organization business model? It could be key business activities or inputs, outputs, or outcomes. Okay, and moving on to the next one is that inputs, outputs, and business activities and outcomes are the elements in business model. Then risk and opportunities. What are specific risk and opportunities that affect your organization's ability to create value over short, medium, and long term, and how is the organization dealing with them? Okay, that should be answered. In strategy and resource allocation, answer the question: where does the organization want to go, and how does it intend to go there? What is the destination, and how are we going? Strategy and resource allocation has to be defined. Either be for short, medium, or long term, and resource allocation plans will be there. How it will measure the achievements and target outcomes. Then performance. For performance, we have to answer the question: to what extent the organization achieved its strategic objectives for the period and what its outcome in terms of effect on capital. It could either be an quantitative indicators or organization's effort, state of key stakeholder relationship. Linkage between the past and current performance is what we do in intra-firm comparison. Then, for outlook, we have to answer what challenges and uncertainties is the organization likely to encounter in pursuing its strategy and what are the potential implications for its business model and future performance. It should discuss about the organization expectation, how that will affect the organization, how the organization is currently equipped to respond with any critical challenges or crises which occur. Last one, we have to answer basis of preparation and presentation. How does the organization determine what matters to include in the integrated report and how are such matters quantified or evaluated? It should state about the material determination process, the reporting boundary, and the significant frameworks and methods which are used to quantify or evaluate the material matters. And now, there are some general reporting guidance which has been discussed. Apart from these content elements, we are supposed to include these things. Okay, what is the disclosure of material matters, and key information like organization strategy, how well it is at interactions and interdependencies, organization view on the matter, actions to manage the matter and how effective they can be, what is the organization control, extent of control, and then quantitative and qualitative disclosures. Then, if there is any uncertainty, we have to report those also, and disclosure about the capitals and disclosure about the time frames, short, medium, or long term. It can differ based on the industry, the nature of outcomes. Um, it may also affect the nature of information disclosed in the integrated report. Aggregation and disaggregation. Each organization remains a level of aggregation, like it can be based on country wise, or it can be sector wise, or it can be division wise, or it may be branch wise, or it can be product wise, whatever it may be. Right? The organization disaggregates information to an appropriate level, considering how the senior management and those charged with governance oversee the organization and its operation. Basically, the integrated report is how the organization top management see the organization's value creation process. Okay. Then we have the international accounting standards, both looking into the wider reporting. In order to ensure the better communication, this has been put in practice. Okay, and this in addition to the general financial reporting. That so the integrated report, as we already discussed, it's to explain how the organization has created value over time. Okay. Then we have the SEBI regulation. This is again a question which is being asked. SEBI with circular number so and so February 6, 2017 has advised top 500 companies to which responsibility report. Okay, just now we are discussing the concept of integrated reporting. General, and all of a sudden, business responsibility report question. It's asked that what are SEBI regulations with respect to business responsibility report? And you'll be quite confused. What is this? We have not read something, but there is a word here, right? Business responsibility report have been mandated under Regulation 34(2)(f) of SEBI to adopt integrated reporting on a voluntary basis. Now, for now, it is not a mandatory basis, but it's a voluntary basis. But it has been recommended. Okay. Then. Therefore, towards the objective of improving disclosure standards in consultation with industry bodies and stock exchanges, the listed entities are advised to adhere the following. The information related to integrated reporting may be provided in the annual report separately by incorporating in the management discussion analysis or by preparing a separate report by itself. So it need not be a standalone report. It can be uh, a distinguishable, prominent, and accessible part of any other report or communication. In case a company has already provided the relevant information in any other report, it may provide appropriate reference to the same integrated report to avoid duplication of information. As a green initiative, the company may host the integrated report on their website and provide appropriate reference of the same in the annual report. And then we have to remember the integrated report falls outside the scope of auditor's work. So basically, the auditor focused on the financial information and not on the integrated report. It's a combination of financial and non-financial information. And then we move on to the last area is focus. For current model, it will be like financial reporting, it will be past and financial. And integrated reporting is future, connected, and strategic. Time frame would be short frame, generally for a year. Here it will be short, medium, and long term. It is detailed, long, and complex. It is concise and focused only on the material issues. It is a rule bound, it is principle based, it is responsible to circumstances where the management has the ability to exercise its judgment. Presentation is paper based, this is technology based. It is a green initiative. Think it is silos, it is integrated. That is, we have to think on a standalone basis, that is on integrated basis. Stewardship is basically on the financial capital. Here, all capitals are included. Either be human, manufactured, intellectual, social, natural, or financial capital. Okay. With this, we complete the integrated reporting. I hope this made some sense. And yeah, thank you for watching. If you like this video, please do share with your friends and like this video also.